Hi, everybody. Welcome. Thank you for joining us. Sarah Springer here, realtor, broker, owner of Pathways Realty here in Tallahassee, Florida. Today, I am meeting again with Robert Barnett. He is local here in Tallahassee with Loan Depot. We are back again today with some more information covering PMI, MIP. What is that? Points, what they do, as well as some evaluation of FHA or government terms. So Robert, thank you so much for joining me again today. I really appreciate your time.
Thank you again for having the opportunity to talk with you, Sarah.
You're very welcome. So you had mentioned overlays in dealing with credit scores for FHA. So what exactly is an overlay, and what is the cause for some institutions being able, like you are at a 620, but I have spoken with other lenders in Tallahassee whose minimum requirement is currently still a 660. What's the cause for that difference?
Well, again, what happens when a lender is working with these big programs, be it conventional or FHA? FHA has their own set of rules and guidelines as kind of their base plan. Well, from one lender to the next, what they do is they put rules on top of the rules, which are their overlays. And different lending institutions do that in order to provide additional risk mitigation. So a lot of lenders, when they close your loan, they're going to transfer the servicing out to a separate servicer. It could be a big servicing company, or could be one of the big banks around that handle the servicing. And because of the concern that they may have with the quality of the loans that they're issuing, they may not have as much of a risk appetite to work with people that do have either lower credit scores or higher debt to income ratios, or some other quantifiable factors. So it really is about risk mitigation. And so again, because with the company I work for, we're a nationwide company, we have a larger loan pool. We're not quite as small as a lender. We have a little bit more risk tolerance and risk flexibility with being able to help people with those lower credit score ranges.
Perfect. And as we've talked many times, sometimes just because you can get a loan doesn't necessarily mean that you should get a loan. And sometimes exploring ways to boost your credit worthiness, your file overall, sometimes it's worth exploring to see if maybe 6 months to a year of better preparation might render better results as far as what you're paying out of pocket, what you're paying for interest rates and other terms that are involved, right?
That's exactly correct.
Robert, what is EMI?
Well, PMI is private mortgage insurance. It's charged on conventional loans, and it's an insurance for the lender, not for the buyer, but for the lender in case the buyer was to default or stop making payments on the loan and the lender has to foreclose on the property. In many instances, when a lender forecloses, there's outstanding interest, there's legal fees and court costs that need to be paid. Well, if that ends up as a loss when the lender sells the property, well, they can file a claim with the mortgage insurance company to recuperate those costs. And under a lot of the new federal regulations, you have to have some form of federal guarantee, private mortgage insurance, or a mortgage insurance premium, a little bit different acronym for FHA, whenever you're putting less than a 20% down payment.
Yes, so mortgage insurance premium, when you're going with FHA, it's MIP. But when you're going with conventional, it's PMI. Same
If
thing.
they don't want to make it,
Yes.
they just make it confusing a little bit.
Yes,
So
absolutely. They just like changing those acronyms around just enough to make it seem like something different, but virtually it's the same thing. So
the PMI is actually flat regardless of whatever the credit score is. It's really
okay.
just the payment that affects the mortgage insurance premium that FHA charges. Now, on a conventional loan, yes, the credit score as well as the down payment and the term of the loan will all affect what rate at which someone is charged mortgage insurance.
Okay. So you mentioned that with FHA, the credit score does not affect the PMI, or I'm sorry, MIP. Does the credit score with an FHA loan affect the interest rate that you will be offered?
Typically, on from about a 640 credit score on up, it does not. So most people, if you've got an 800 credit score or if you've got a 640, you're going to be getting the same interest rate on your FHA loans. Once you start getting in those lower credit score ranges, yes, you can see rate adjustments. Again, that's part of
The risk.
the risk mitigation that lenders do. So typically there's a little bit of a bump under 640, and different lenders again may still be pricing loans differently if they're under that 700 credit score range. So again, if you fall within that, it's still an important thing to be able to shop. And pre-COVID, again, there were significant rate adjustments, especially if you're going down to as low as a 520 credit score is what it used to be. You would probably see about a 0.5% difference in the interest rate just with that lower credit score.
Wow. Okay. So, Robert, again, thank you so much for all of your time and recording the different videos. Again, if you have not watched everything, we have lots of different videos. You can see them listed below. You can go to either find Robert Barnett on Facebook or at Pathways Realty TLH on Facebook for video postings, as well as Sarah Springer YouTube channel, where we have multiple videos about financing and lending listed. So thank you again so much for joining me today, Robert. I appreciate your time and I appreciate your knowledge. And I just hope that you have a wonderful weekend.
Thank you again, Sarah. I always appreciate the opportunity to speak with you.